Up and down in all around. That's been this week. New all-time highs, a couple wicked sell-offs, some volatility in gold and silver, earnings. And we got more earnings. Later in the show, we'll cover SanDisk. Unbelievable move. We'll talk about Apple, take a little backseat in Apple. We got corporate news. We got Musk shaking things up with Tesla AI, and we'll bring in our expert on that, Dennis. That's it, folks. We got an 8:35 guest with Tony Pawlak. Get your tickers ready. We're going to just pepper him with tickers. Folks, we got ratings coming up later in the show. This is a Friday. We're fired up. We're going to need some rest over the weekend. It's pre-market prep coming right at you.
The volatility right now is really incredible.
Wow, look at that consolidation on the upper right chart.
You know what we've seen this earnings season? Some of these expected moves get even more violent. This is why I have switched my strategy 10 years ago. And if you're chasing, you're in trouble.
Well, if you were chasing overnight, you had about an 80-point range in the S&Ps to do that. We're down 31 handles, 69, 61, 75. But you know what? We're basically up a little bit on the week. That's what we care about. The buck trying to recover for the third day in a row, up 14 cents, 96.28. TLT down 44 cents after 2 days of gains at 87.18. USO flat after a furious rally at 79.01. Whoo-hoo. Crowded trade 101. The day was coming for GLD and SLV. We just didn't know when here. Those stocks are trading deeply in the red. I was trying to get the 24-hour chart there. That's no good. That's down $30, 465. SLV down $14. That's 13%, 91 and a quarter. Bitcoin not having a good day. That's down $1,400 at 83,000. These charts are brought to you by TradeStation. Chart, analyze, customize, all in one program. Let's bring Triple D to the stage and let's talk a little bit macro here. It's a little bit boring. Your buddy Kevin Warsh is the next Fed chair.
Yeah. Well, we thought originally it was going to be one of the two Kevins. It indeed does end up one of the two Kevins. Mr. Brentster, bring him into this conversation here. So announced last night, we have the truth. Hey. I believe we have the official announcement from Truth Social that the new Fed chair is indeed going to be Kevin Warsh.
Here it is. Y'all can read if you want, but this is it. So
please
odds
announce.
Yeah, you want to go ahead?
Kevin Warsh. I won't read the whole thing. To be chairman of the board of governors of the Federal Reserve System. So
that's kind of it.
I don't know. Thoughts. I think he's the better Kevin. I like him better. I didn't know where they were going to go. There was obviously the Kevin's odds dropped significantly, both of them about a week ago. But now Kevin Warsh is officially nominated.
Yes.
Go ahead.
This is not so the odds dropped, but Kevin Warsh was still like a 25-30% chance according to PreMarket to be nominated Fed chair. So just to say it, just to reiterate what we've already kind of said, I don't think this is any huge surprise that we're getting Kevin Warsh being nominated here.
No, I don't. No, we very much suspected 2 weeks ago it was going to be one of the two Kevins. Yeah. And it ends up being Kevin Warsh. I don't think this is I think this is middle of the road. I think it was a decent decision. I think Kevin's going to do a good job. The question is, is he going to be more dovish, be more under Trump control than Powell was? Probably. We've suspected that when Powell goes out in the second half that we actually may see rates drop substantially. I still of that suspicion, especially with one of the two Kevins. I was it's one of Trump's guys. Trump really wants rates lower. In all likelihood, we're going to see rates quite lower in the second half. Now, that doesn't mean anything for the immediate future. We're still 4 months of Powell. Yeah. So I think rates do stay up. I don't think there's going to be much chance we're going to see rates drop here. You can look, to the Fed tool, and we can clearly see, very little chance for March as well.
Yeah, and very, very little change here. This is for the March 18th Fed meeting, around 85% chance of no rate cut. April 29th Fed meeting, about a 70% chance of no rate cut. This one has moved. I want to say about 10% lower, but June 17th was when we had expected for a first rate cut, at least according to Fed Fund Futures Bettors via the CME FedWatch tool here. And this one really hasn't changed. This chance for a 25 basis point rate cut is still right around 50% or so. This went up literally a few points, like 2 or 3 or 4%.
Okay, so PreMarket had him at 30%, but it has a U.S. government shutdown at 75% over the weekend. Dennis, how does that affect your overnight
I mean,
weekend?
it's something to think about. I think that, so we've been doing the weekend trade for a long time. The weekend trade basically just being long, the retail darlings, because you got markets closed. It's all day Saturday. They can't wait to get there and get down dirty Sunday night and Monday morning to buy all those stocks. That trade has cooled off a little bit, which is probably going to get us, into a conversation about this market in itself has, and the title of the show is Cracks Forming. We're seeing some of the bubblicious names starting to come off a little bit. So we're going to get into that conversation in a few minutes. But, the markets have navigated through U.S. government shutdowns before, as recently as 2 months ago. So I don't think this is like, oh my gosh, what's going to happen if the government shuts down? We know what's going to happen. Really, a whole lot of nothing for the markets. I don't expect it to sell off. If it does, it's a knee-jerk reaction. And we saw yesterday, even, with that huge sell-off that we had yesterday morning, which it started there. It was ugly. In the first 20 minutes, it was like, holy cow, stuff is going down so hard, obviously led by software, but then they started selling everything. I mean, AMD lost 20 points in the first 2 hours. But then the buy the dip mentality comes back, Mr. Joel Elconin, and you can't hold that buy the dip.
What about the dip in the metals?
Well, and that's today. So this is why we're saying cracks are forming here, because we had yesterday software got absolutely hammered. You can go across the board. And I tweeted out a list of software companies in the S&P 500. And of those pure software companies, because when you go to software, there's like 300 companies that have some type of software. So I was like in Gemini, I was like, well, narrow it down to like software companies. And I said, narrow it down like pure software companies. And they gave me a list of 27 stocks. 26 of them were down. The only one up was App11. And the 26 names, some of them were absolutely hammered. I mean, we knew Microsoft. They talked about it all day. We knew ServiceNow. They talked about it all day. But there were names yesterday that were getting hammered, like the cybersecurity stocks were hammered. We speculated that it might start rolling into that. It absolutely did yesterday. And then you saw like stocks like Workday and CRM just, getting just hit really, really hard. So then it started rolling over into everything yesterday morning. But then the buy the dip mentality is just out there. Now, it didn't come into the software name so much, but it came into everything else. So then you come in this morning and you're like, okay, well, what is bubblicious here still? It's the metals. And I mean, we can look at gold, but you got to look at silver. Holy crap. Down 14% here today, SLV. And what goes up in a straight line off, it comes down in a straight line as well. Does the dip get bought? Doesn't it always, it seems like? But, I mean, we've come so far. I mean, when you really give it perspective, silver going from $40 to 110 or wherever the hell it got to seems a little bit ridiculous. So, I mean, this is the one that everybody's talking about here this morning. SLV in itself has already traded 30 million shares. Give us some details here of your thoughts here, Joel. I mean, we had a little bit of upside capitulation yesterday, and if you're chasing at this point in time, you're really late to the party.
Oh boy, oh boy, oh boy. I mean, you can use charts on this. Dennis, is this like what kind of market? I was just curious in this SLV. Is it like how wide is the market? Because I know you get those 8 o'clock prints going up, and it's absolutely
because the futures are open, it's trading off. The SLV is right tapped in with the futures. So this is where high frequency trading, and we've been, we've had, mixed reviews here on this show about high frequency trading. But in this case, this is one of the benefits, one of the pure benefits of high frequency trading is that it keeps futures and things like the SLV very much in line. So when the futures are open, and silver futures are indeed open, you're going to see this trading directly off of futures price. So SLV is sitting here with an 8 to 10 cent spread and just trading off the futures.
Okay. I was just wondering because those 8 o'clock prints go up, and I'm like, holy mackerel.
The 8 o'clock prints are, again, we've talked about this before, but we haven't talked about it in a while. So if you're new to the show, you see a lot of crazy prints go off at 8 a.m. and you're like, whoa, look what that stock just did. These are off exchange trades from the overnight session that are just hitting the tape at 8 a.m. So you have, the whole period from 8 p.m. to 4 a.m. is a trading period where this is trades that are being executed on Robinhood, trades that are being executed on IB, trades that are being executed on the overnight session for your other retail brokers. Those have to hit the consolidated tape. They do a consolidated dump of all those trades at 8 a.m. So what happens is you see sudden moves if you're using consolidated data on your data feed. You think the stock just tanked, like SPY we were just seeing go off at 688. Those were trades from last night. Those aren't trades actually occurring at this time. So I don't know why, but the retail brokers, because the exchanges aren't open, they can't print them to the tape at midnight. So they have to put them on at some time. Why they choose to dump them all at 8 a.m. is a little bit annoying. I'd rather see it at 4 a.m.
Yeah.
Maybe that's a thing, for everyone to think about here. That this 8 a.m. dump when everybody's watching it probably spooks the market to a certain extent when you have like a sell-off overnight. So I think it would be better if they did this dump at 4 a.m. when most traders are sleeping, but they choose to do it at 8 a.m. That's where they all dump in there, and it's annoying because it changes the prices to where they were last night, not where they currently are.
Yeah, things have calmed down. For it, it's still up a lot. The only thing I just, when I heard this, or I can't remember when I read this, it had a big week, and I think the volatility here is just off the roof. I saw that if you even sold puts a week ago, okay, and you could still, sold some puts way down here or whatever. Yeah, you're safe. It's never going to that price because of the volatility. Now, with today's price action, it might be a little bit different. But even with silver going up that much, you would be down on those options because of the heightened volatility. So I don't know when I've seen that before. Tough to do technicals here.
GME we saw it with.
This wild. So hopefully you get a little bit of consolidation, but silver down, leading the charge here. And spilling into big, there's some selling in Bitcoin here, Dennis. Kind of symptomatic of what's going on in the market.
Yeah, well, we've talked about this for a while here. We got the Hive banner up there, Brentster. So if you want to give your little Hive talk here, then we'll dump into the technicals on Bitcoin, because Bitcoin is having a major technical breakdown here right now. But give us a little Hive talk.
All right, folks, y'all know Hive is the sponsor for Pre-Market Prep. We want to say thanks to Hive. This show is brought to you by Hive Digital Technologies, a global leader in green power data centers for Bitcoin mining, high performance computing, and AI operating with nearly half a gigawatt of renewable energy. Hive is one of the fastest growing Bitcoin miners, on track to grow even more this year. Scan the QR code in the bottom right corner of your screen. You can get over to HiveDigitalTechnologies.com, where you can learn more about the company. Thanks again to Hive.
This is what I said on Bitcoin about a week ago, maybe not, 3-4 days ago. I'm like, it's been hanging out at the lows for too long. They don't give you a chance usually to buy the low for this long. Now, we saw it with Lululemon, comparing Bitcoin to Lululemon, I'm doing, where it hung out the lows for 6 months and then eventually went higher. Normally, though, when you hang out at the lows for this long, eventually you consolidate lower. So now that we get the technical breakdown, and we could do an undercut and rally, there's always that possibility here. But on IBIT, the major level is right here, right now. So we are on the verge of a major technical breakdown. 46.68 was the low back on November the 21st. That low is being tested here, right now. Support is support until it's broken. So it's still support. But technically speaking, this is looking heavy to me. What are your thoughts, Joel?
My thought is that it gave you the breakout over 54, and also in the Bitcoin futures that relates to 95. And oh boy, we're off to 100K and rug pulls. So let's see if the same thing happens on the downside. where they take out the low and do a little bit of a rug pull. But it just the luster's off. It's the old hanging out too long formation. If a stock or a commodity, a future is hanging out in an area for too long, same thing as resistance, just hanging out. It won't go down. Yep. And then you got to look at it. That's why we try and get people to look both ways in the markets. But the low at Bitcoin, that former low was 81,940. You got to 81,210, and you're not getting the big bounce. I don't think we really need to go into the longer term time frames. Let's just see if we can get a bounce off the November low in Bitcoin and IBIT.
And again, Bitcoin is probably the victim of the type of market that we're in here right now, and that market is despeculating. What does that mean? That means you've got a lot of speculative bubbles chasing stocks with super high PEs. This has not been the year of the super high PE. This has been the year of the low PE. There's been a lot of stocks that have had pretty darn good years that have lower PEs. Higher PE stocks are not being tolerated right now. They're being sold, and we've seen this across the board. It started back in October. It started back with October. We always pick on Oklo, but I mean, we're getting to a point where Palantir now is starting to fall apart. I mean, it's just spreading. So right now, low PE is cooler than high PE. That's been for 3 months, and that is accelerating here at this point in time. You can't even do a PE on Bitcoin because there's nothing to PE. So, I mean, if you're looking at speculation, I mean, that's what Bitcoin is. It's all speculation. So if the market's despeculating to a certain extent here, probably not great for Bitcoin. Now, back to the metals, pure speculation, this has been running rampant here, not only in silver and gold, but we've seen other metals flying high like copper, palladium, name it, the metal's been going higher here. We're seeing that come off here this morning. So it's like little, yesterday not the software's in a bubble, but yesterday was, that was what was bursting yesterday, kind of bringing everything down with it. But the higher PE names have been leaking their bubbles, for quite a while here. And now you get, the mania coming out of silver and gold, which brings us to the report of the night, which was not Apple, it was actually SanDisk. This is the report of the night. This report was unbelievable. I said it on the STN room last night. This might be the best report that I have ever seen since looking at stock reports for the last 25 years. You were so shocked, Brett. You started comparing the numbers. Initially thought it was a miss because you were comparing the quarterly number to the yearly number, because they almost beat their yearly expectations on the quarter. This is incredible.
Exactly. So I'll get you the numbers here, the Q2 numbers, and pull up the chart here for y'all to look at. Q2 adjusted earnings, 620. They doubled the estimate. The estimate was under 310. Sales, a nice beat here, 3.03 billion. Analysts were under 2.6 billion. The guidance. Company says they're looking for next quarter earnings, $12 to $14. Folks, that's where the full year estimate, according to the sell side, was. It was around $13 for the full year. The estimate for the next quarter is at $360 right now. So almost $10 more in earnings for just next quarter. Now, the sales guidance wasn't like so crazy as the earnings per share guidance, but it still was amazing. Company looking for quarterly sales 4.4 to 4.8 billion. Analysts down about 2.6 billion.
So lots of thoughts here. We did say going into this last night on STN, I was just saying, I don't think the market's prepared for how big SanDisk is going to beat this numbers. Why did we know that? Because we saw Micron's report, and we know that DRAM pricing has just flown. So I don't know what the analyst community is doing, having their estimates that low, but it was obvious, guys, says that this was going to have a big quarter. I also said, I'm like, I don't think it's priced in. I think it's going to really beat and probably go up. I said up 50. I actually initially said 100. And then he said they expect to move up 50. So I was like, well, I think it goes up 50 because I saw what Micron did. And this is like now the expected move being just over 50, I think. It's now up 130. So this was a pretty obvious trade. I know Bill Big D, you took it. Congratulations. A few other members, I believe, took it as well. The one thing to consider is that this is also a business that is very derived from where memory pricing is. If memory pricing all of a sudden turns around and starts tanking, these stocks will follow it as well. These are kind of like commodity stocks. I know people, say, oh, they're businesses, and they are, but they're kind of like commodity stocks because they are selling RAM. And if that's flying high in price, you're just making way more money. And we know what RAM has done. So if RAM all of a sudden starts to fall, because we're bubblicious in a lot of things, and we've seen some commodity prices start to fall, SanDisk could be one that could fall as well. So it's up 129. I think at this point in time, I probably would be ringing the register because I think, we can look at it and say, wow, they're going to make so much money. And absolutely true. The year of low PE, and the stock simply cannot catch up to where RAM pricing is going. They're just chasing the prices higher. But if DRAM starts to actually fall, memory starts to actually fall in value, which, you're going to say, why is it going to do that? We need it. We need more of it. We do, but are we a little bit like when it goes like this? Doesn't it have some type of pullback here? So these stocks, Micron, SanDisk, Seagate, Western Digi, are all going to chase the price of memory. If memory prices start to fall, these stocks will come in a hurry. So again, treat these stocks more like commodity stocks, not so much tech stocks. And the commodity is memory.
Dennis, and to your point, and to the point that you've been warning, people watching this trade for months now. On the call last night, I listened to some of the SanDisk call, and one of the execs, I believe it was the CEO, but don't quote me on that, and I might butcher this quote, so don't quote me on the quote either.
Sure.
The exec was like, we are preparing for the environment to be less favorable for us the next 2 quarters. A little bit of a warning. The stock did not react at all because in pretty much the same breath, the exec on the call was like, but our goal is to focus on our long-term growth. So maybe giving a little bit of a warning toward what you just said there about the memory pricing cycle. But again, management is saying that their focus is on the long term. I think if you're a shareholder, I think you want the company, I think you want management to focus on the long term. So the street, bet with
It's
its
windfall
pricing.
profits times for all these companies here. Like
Absolutely.
with memory exploding
Yeah.
like this is like a windfall. Like they are winning the lottery by their commodity price just simply exploding in price. So it's not like they're executing. I'm sure they're executing awesome. SanDisk, Micron, awesome companies. But the bulk of this is simply because RAM has exploded in price and they're selling RAM. So that's where the bottom line is. These are commodity stocks.
Yeah. Analyst catch-up game here this morning, of course. I don't think that surprises anybody, but I want to just highlight at least a
Sure.
couple analyst ratings here. I'm looking at my Fly platform over on my other
Yeah.
computer, thanks to the Fly. New street high price target, Bernstein, it's at $1,000.
Yeah.
From
I mean, this is
Goldman,
where they go. So they
this
were
is where
way
they
out.
go. Yeah, exactly. Not a ton of great analyst color on the quarter here, but I look to Goldman, arguably our top sell side firm, to just try to give us a little bit of indication what went so well. And the quote from Goldman, again, thanks to the Fly: tighten NAND supply, accelerating demand, improved product mix support the view that revenue and earnings could materially exceed street estimates over the next year, according to Goldman Sachs on SanDisk.
If DRAM pricing stays high, these stocks are dirt cheap. So we can say, oh, it's the year of low PE. It really is, because these PEs can't keep up. I mean, Micron PE is still somebody saying Chad's 11 after it's had this huge move. But again, remember, if those prices fall, as DRAM prices fall, you're going to see all of a sudden these companies not make nearly as much money as they are right now. But if prices keep going higher,
Sure.
they're going to make more money. So basically, a bet on SanDisk or Micron is a bet on memory pricing. That's what it is.
We should mention that another major player in the memory space reported last night, also right at the same time that SanDisk reported. Western Digital also reported. The report was good. The guidance was pretty good, but nothing crazy. But I mean, SanDisk just completely overshadows the Western Digital report here. Just wanted to mention, but we don't have to focus on it too much because SanDisk absolutely was the story.
So the other major report there was a small company reporting here last night, Joel, which didn't affect the S&P whatsoever. No, it was Apple, obviously.
Oh.
The report for Apple, to your point here, Brentster, was pretty darn good too. So give
Yeah.
us the numbers for Apple, and then we're going to break down the technicals.
Company reported 284, beat a 266 estimate. Sales 143.8 billion. Analysts were down around 138 billion. Get to the call. The call was at 5 p.m. I believe Apple does not normally give guidance. They gave some guidance on the call, and it was some solid guidance. Tim Cook on the call delivering Q2 sales guidance. They're expecting Q2 sales up 13 to 16%, gross margins around 48 to 49%. The stock started moving when actually it might have been the CFO who gave this guidance when the guidance was given on the call. Stock started moving higher. We get into the Q&A. We always know the Q&A is a juicy part of our conference calls. Conference calls up to the Q&A are a lot of prepared remarks by the execs. When we get to the Q&A, it's when things can start to get a little loosey-goosey. Analysts can throw some curveballs at the execs. A question on gross margins from one of the analysts, and Tim Cook had to respond and give a little warning that they were going to see, quote, a bit more impact to their Q2 gross margin from some supply constraints. Guess what? Related to memory.
Yeah.
Stock started ticking a little bit lower on that during the call, but a little bit of information here to just a little bit of info to digest on Apple here last night and this morning.
Yeah. So there you go. I mean, the stock had a huge pop though on these earnings. We were up to almost 269 last night, and you just tell it, just didn't want to hold, came back down. Then they had said some good things on the call initially, and it went up and then came back down again here. I mean, now, so you got a pretty good report, the stock is red. What do you do with that? I'm asking you, Joel. What do you do with the technicals?
Well, the expected move was 11 and a half, so that would have took you to 69.75. You didn't get there, and then so nowhere near the expected move on the downside. What I'm going to be keying on here for Apple is to take a look at this move here. You had a big decline, and then you had the rally. You know how I like my retracement lines? Boom, we went here, we went here. So this is the 50% giving back half of this move. This is down 252, 253 area. I like to see it. I like to see a pull back to that area and hold. I think the longer that it takes to get back down to that area, you filled another base and curl back upwards. But quite the haircut for Apple. And then just on the upside here, it's hard to pick a number. I put the circle here because look at those. Those are 3 bad days, 270 to 260. There's a lot of people getting their money back between 260 and 270. I think that will persist here in the regular session.
Okay, so a couple other earnings reports here, but before we go to those earnings, I want to talk Tesla because this was some major news last night, and we'll try to slip this in before we get our economic data here at 8:30. Breaking yesterday here, Brentster. First was a Reuters article saying that Tesla may take a stake in XAI. Then Bloomberg comes out last night and adds to this, saying that Tesla, and SpaceX, like Tesla and SpaceX may actually merge. Now, this was just rumors, but Tesla exploded higher on this last night. It went from $416 up. How high did we get, Joel?
You got to 436.70.
Of $20. And then she started to leak a little bit, and she's come back down because I think people are realizing these are, just talk here right now. We don't know if any of this stuff's going to happen. We also know that Musk talks a lot here as well. I mean, my thoughts, and actually Reuters quoted me in that article. I gave the quote, and I'll just give it here again, is I think Musk wears too many hats. He's got Tesla. He's got XAI. He's got SpaceX. He's got the Boring Company. He's got other, businesses that he's trying to work on, plus all his political commentary here. Musk is a busy boy. Musk probably would benefit from having more of these companies under one roof. So, what I said in the Reuters article, and you're scrolling down through there right now, is I said Musk has too many companies. It's right there. Major risk thesis for Tesla is that Musk is spreading himself out too much. And as a Tesla shareholder, which I still am, I applaud more further consolidation. So if you saw, SpaceX and Tesla merge, I think it's fantastic for Tesla. If we saw Tesla take a stake in XAI, I just think he's just too many big companies. Let's get it all under one roof, and then we can figure out, okay, now we have the ultimate investment, Tesla. That would be amazing. I don't know if he's going to do that. I don't think he's going to merge. SpaceX and Tesla will be such a huge merger. Last time we've looked, both of these companies well over, where are we on the market caps on Tesla now? Is it $1.5 trillion or something? And then we look at SpaceX and they're saying well over $1 trillion as well. I don't know if we've ever seen $2 trillion companies merge here, but this is really something interesting.
The
market was really excited about it last night.
Market is falling here. We did just get PPI. This is our rescheduled PPI for December. Better than expected here, up 0.5% month over month. Economists were looking for a 0.2% increase. The core PPI reading, which excludes food and energy, those are volatile sectors, up almost 0.5% above the estimate, 0.7% higher versus a 0.2% estimate.
Ooh.
So we have, I said better than expected, but this is hotter than expected. This is higher than expected inflation. Core PPI for the month of December, month over month from November, up 0.7% versus a 0.2% increase. This is a concern for rising prices here, folks.
Yeah. And we're talking about the prospect of getting lower rates potentially in the second half. But if inflation starts to creep back into this economy, then all bets are off. So we've been saying inflation is dead. We had Pomp yesterday saying deflation is the riskiest, there's the risk here now. I don't know where he was coming up with this 1% inflation data, because we know CPI is obviously under reports, and then, he's looking at real inflation or something, but I have no idea where a 1% point is coming out from. But if you start seeing inflation start to tick higher here, this is a major problem for the markets. Now, what are the most sensitive names? IWM right away. Go right to that. That's going to get hit on a data point like this. XBI, because all these small biotechs need to borrow to finance their trials. That's going to get hit as well. These things get hit directly there. We know S&P SPY is more diversified, lots of different businesses and lots of mega caps in there. But, this is not a great data point here this morning if you want lower rates.
For sure. And if you look at it, when we got this data, where was crude at? Well,
that's what I'm saying too. And we take out, crude, we take out, but not even just crude, like energy prices across the board have went up here. With the cold weather, we've seen natural gas prices explode. We've seen, obviously other commodity prices. Copper moving up ridiculously. There's a lot of these metals that are use cases here. It's not all like gold where it just looks pretty sitting there. Some of these metals and stuff we actually use, and these commodities we use. So, there has been commodity inflation going on here for a while. We don't consider some of that in the CPI because CPI takes out everything inflationary, but this is a concern.
We're going to get several readings of this before Warsh is put in place. And I don't know I know it takes the Fed funds tool some time to adjust.
Sure.
But is June going to be off the table now if we start getting some rising?
Well, Powell will leave in May, I believe. So it'll be under Warsh in June, if I'm correct. And you may be able to verify that or somebody in the chat. So I think that's why we suddenly see the sudden spike up for potential for June, because Powell's at a point, and I think he's putting his head boom, no, we're not lowering rates anymore. We did it already, Mr. President. The economy, stock market's at all-time highs. And obviously with inflation ticking higher here now, if this data points keep coming in a little bit hot, there's zero chance that we're going to see a rate cut under Powell.
Okay. I've missed ticker time for the last couple weeks, and who better to do ticker time in this environment than our leader over there at Real Life Trading? He's smiling. I knew he'd be smiling.
It's here.
Uncanny ability to make I make Jeremy laugh, you laugh. How you doing, Tony?
Great. Great. You bring out the best in us. That's why. So it's not hard to do anything else.
All right. We're going to ticker time here, and our chat's just going to rattle them off, and we'll spend majority of the time. But just, how you feeling about this market? We're unchanged on the week. Basically, nothing happened this week, Tony. I don't know what you're thinking, but just give us your overall feeling on the market. We'll go into ticker time.
Yeah, this is, to me, it's starting to show a little bit of slowdown, in my opinion. We'll see. I always love to see what happens when we claim new ground, make new highs. And so far, we've just gotten a lot more volatility instead of stability. And so I think we could be getting a little bit weaker. I mean, it doesn't mean we don't go higher, but I look at these early warning signs to go, hey, even if we do crank higher, that tells me we're probably pretty close. I mean, every time we start getting some consolidation on a weekly time frame after a year of straight bullish, it's normally the early indicator that we might be getting some pullback. So I'm looking possibly that, some slowdowns are coming. I legged into a couple puts yesterday. So that's kind of where I'm at the moment, but still, long term, haven't sold anything like that. It's getting a little bit shaky out there. And if some of these levels break, like our puts are holding at 675, that's the big level. That's really what I'm watching. We get below that, now we're talking. Until then, I'm going to wait and see if that $700 target gets hit. So that's where we're at on that one.
Tony, I'm going to throw the first one at you, and it's Micron, because the stock goes up every single day, MU. And I'm just wondering, what do you do when a stock goes parabolic? Like, we talk about, other obvious charts. SanDisk, same thing. We can talk about both of them together, because SNDK has went parabolic as well. Like, as a technician, what do? Do you just keep riding it higher here until it breaks the moving average or hits your stop? Like, how do you approach stocks that have gone parabolic?
So for me, I am going to put money on that I'm okay to burn. If I'd give it to a homeless person on the street, that's what I would put on this, right? And so with shares, that's going to be tough to do. I would play this with options. The volatility is going to be crazy. You're going to pay for it. That's what it is. Number one, stay away from it if you're not in it. We'll go into the approaches if you are and how you manage it. But if you're not in it, go find an easier trade, because like we talked about, this is going to pull back at some point, but it's probably going to keep going up another 30% or 40%. It's like, you want to make that money, but this is the hardest time to do it. So do it with some options, but understand the downside of those options. Put the money on max loss that you're okay to lose. So if you're okay to lose $200, spend $200 on some options. Don't go put on 10 grand hoping that you lose $200, because you could lose that 10 grand overnight, right? So manage your risk. The easiest way to do it is with options. And what I do is I will look at certain higher lows coming through. So this would be my line in the sand here at 420. I expect it to kind of chop around. We get below 420, that's where I would exit any position. So if I was in on this and you want to stay in on this, you just keep trailing stops. Just keep trailing stops and keep playing these higher lows, because these higher lows on like a 2-hour time frame should not break until the trend is, we're going to start getting a lot more selling normally. So if you're in, that's what I would do, is just keep bumping that stop up, and then we keep doing that game and take it higher until you either get trailed out or until you take it. But anywhere up through here, especially on this big gap up, it looks pretty good for some profit taking. And something that I'm noticing here at this previous resistance with extended hours on is that we're starting to get stuck here, whereas before we were cranking through every one of these levels. So that could be a little bit of a warning of a slowdown, and maybe a little bit more of some selling coming through. At some point, the profit will be taken. This is really suckering everybody in, because it's rewarding all the bad traders. Everyone's like, I'm so good at trading because I buy, and then it just keeps going higher. And it's like, they don't take into account risk. All they do is see opportunity and money signs. Your job as a successful trader is to look at things with risk, not opportunity. There's opportunity everywhere. Opportunity is not what's going to make you money. It's how much money you lose when you're wrong that undoes all your wins.
Right.
And so with this, you got to look at it, the risk. The risk is very high on this, because that rubber band is going to snap at some point and it's going to pull back down. And so just control your risk. Don't let your eyes see the money, because there's opportunity, but opportunity is never going to keep you in the game long enough to help you actually see a life-changing move. You're going to need to control your risk and get through the hard times and have the good offset those. So that's kind of what I'd be looking at and trailing my stops with, just using those higher lows. And then I would personally be buying options here. because buying this with shares is going to be a tough game if you do end up getting like a big gap down, which could happen. So it's very volatile. Hasn't really shown that yet, but it could. So that's what I'd be looking at. It's probably going to continue higher. Again, the opportunity is not what's going to give you success in the long run in trading.
We got Steve Alexander and Rick Knight both want Robinhood, HOOD.
All right. Yeah, Robinhood. So I do think that bulls are going to be stepping in here soon. We are kind of getting a little head and shouldery, and we've never retested any of this here. And so it's kind of at that point where it has to bounce. I would think that a little bit of a trap below 96 could be the play. Whenever a stock is very weak but at a bouncing spot, look for the traps to come through. Let it get down here. Let it get all the bulls out. All the bulls are praying for a bounce right now. Break their hearts, right? Don't be with the crowd. Break their hearts. Let them all sell and then see if it bounces up. If you can get that price action, they're going to come flooding back in, and normally you'll get a little bit of a squeeze. I don't expect this to go to all-time highs again. It's possible. I still feel like there is structure here, like maybe a flag that's coming through that could tell me that we go to all-time highs again, but at least a move back up into like 116, which is a solid move and a solid return. So I'm looking a little bit more bullish on this. Now, if the bulls don't reclaim 96 pretty strongly, there's not a whole lot holding this thing up. So just be prepared for that. But that's my play. If I were not in this and waiting on this, we have earnings around the corner here. I would kind of love for a gap down on earnings that gets bought up. Like I think that would be a pretty fun play and go that route.
Okay. Let's go to Snowflake. We talked about the cybersecurity stocks yesterday, software related. The stock almost not quite $80 off its all-time high, I believe, unless it did something crazy in COVID. Are you trying to pick a bottom in Snowflake?
On a weekly, it looks like a massive double bottom trying to come through. There's hope. Again, kind of at the buying spot right now. So I wouldn't be shocked to see some bulls over the next few weeks start to come back through on this. But I don't love how it claimed the new ground here, and then it acted as resistance coming back in. So, I mean, where the bulls should have been strong, they weren't. And now if we just go to a bigger time frame, we're back at the place where I think it's a great buy spot. It's a great support. If the bulls are going to be here, I would say look for it to show up somewhere through there. So again, putting yourself in other people's shoes is a great way of reading sentiment and trading successfully. Do the opposite what of your natural reaction is. Natural reaction is sell everything right now. It's just going to tank. It's falling. This is the hardest point for people to buy. But if you can just zoom out, you'll see, hey, we just made a new high compared to here. Odds are a high low is probably following. It's just where. And this is a pretty good support that I'd be watching. So I wouldn't be buying this necessarily here. You could, but it's a place to watch. And if you start getting some momentum coming back through, like maybe they reclaim 225, that could be the trigger to say, hey, this party's starting and there's a good chance we're heading back higher.
I think we got a new chatter. Whatever make you happy wants to know about Amazon. AMZN.
Yeah. Amazon is going to be make or break by its earnings. So I'm pretty sure that's
next
tonight.
Week. Next week.
Oh, that's next week? Okay, good.
Next
I was going
week,
to say, dang.
They moved it. Originally, it was supposed to be last night, and then they moved it to next week.
So leading into earnings, most of the time you'll just kind of get some positions, right? Some hedge positions. It's going to be a lot more of chop most likely over the next week on Amazon. The big picture on Amazon looks good. I don't see any real issues with Amazon big picture right now. But if we start getting below 212, that would be my big marker right here. We start getting below that, I bet you that's where a lot of options are sitting too. I haven't looked. Then I think we have some issues, and it's probably going to work its way back into some previous supply zones. But for now, this looks bullish. It doesn't mean it's going to gap up over earnings, but I would expect, well, let's see, what is this here? I would expect 226 to hold and for probably some more bulls to come through. So I like Amazon right now. It looks good. There were some sketchy points here, but this is what I was talking about down here, where everyone's getting scared. If you're prepared for it, this is a great buy, and it's running up. So one more visit back into 257, then we'll see where it goes from there. I like it bullish.
We got Amethyst wants Netflix. And this is a stock very much opposite to what Micron's been doing. It just continues to go down every day. Like, I mean, it's just steady as she goes, leaking. When's the leak stop?
I legged into some longer term leaps on this actually last week. So I like this area with the expectation that 75 could be my next buy. So I think that this is coming into a pretty good zone. If anything, a short-term reprieve will give me some chance to read sentiment before it rolls back over. But here's that trapping support. This is going to probably start breaking the bulls heart a little bit. And I think we somewhat hold, especially if we come down to 75. This is my next little area. I like it for a bounce up here. And whether or not it goes back to all-time highs, I'm not sure. But at least back up into like 105. And that is a fantastic trade. So it's getting into a place that's really nice for some credit spreads as well. If you're selling options, this would probably be the play. That gives you a big cushion. Sell down. I would sell down around like 60 to 55. So if it does go lower, you've got a cushion. That's almost free money in my opinion. So sell some of these to pay you some money to fund your shares, to fund your leaps, whatever you want to buy. Leaps are just longer term options. And I buy longer term options because they're going to act like shares for 6 to 8 months. So these options expire in a couple of years. And so if it goes down, I'll be down, a couple percent. If it goes up, I'll be up a couple percent. It gives me time. But what it does, instead of putting $200,000 of shares on my, buying power gone, I take $3,000 worth of buying power for the same buying, basically, power, I should say. So that's why I like legging into some leaps, because it doesn't take up a whole lot of buying pressure, buying power, but I still get all the rewards of it going higher. The downside is you can lose that money, right? If it doesn't bounce, it's going to go to zero. And so what I do is I buy a strike a little bit closer. And if it does rampage, I can always just exercise those options and buy the shares at that strike. And so that's an easy play that I do whenever I'm trying to pick bottoms, but I think there's lower to go. Buy me some longer term options and then just exercise those options later on if I really want to. But it just takes the risk off the table. I don't have to stress at night. I'm not having a whole lot of buying power sitting here hoping it's going to bounce and then needing to buy more and then getting myself into a deeper hole. If it continues to drop and I buy a little bit more, I've got a few $1,000s on the line here instead of, hundreds of thousands of dollars worth of shares or whatever that percentage is for you, right? Like maybe, you got $10,000 held up and this thing is going to bounce and then it doesn't bounce. It just makes trading a little bit easier. So that's what I personally have going on Netflix. I think it bounces soon, but 75 would be the next spot if the bulls don't hold this level.
So, Tony, you mentioned the term about 3 times, legging into, okay? And we all know about legging, right? Sometimes if you don't put both both parts, if you're doing a position like that, you can get in a lot of trouble. I know you're risk adverse. Talk about your legging. Do you go to shorter term charts? And everyone has their own definition of legging. Give us yours.
Yeah, for me, I'll start legging in with longer term options for the first part. So that gives me time to let it drop for a few months if it's going to drop. And then I'll leg in with shorter term options on the way back down. But I'm usually buying options on these legs until it gets to my final leg of that pyramid. Then I'll put some shares on it.
Okay.
So that's how I've been able to manage it. So again, if it doesn't really bounce and it's just dropping lower, I'm getting my best entry with shares, something I want to hold longer term. If it rampages, great. My options will make a lot of money, right? They're fantastic ways of building really good growth in the account. Or you can always just call your broker and exercise them at your strike. That's why I don't buy too far out of the money on these. But for me, it's all about managing, giving myself a max loss. If something were to happen and Netflix drops down to $30 and you bought shares at 85, you're going to be sitting in that for a long time and just underwater. Whereas for me, it's like it can do whatever it wants. I have a max loss. I'm okay. The next thing I'll do is I'll start to play with some puts. So I'll actually start buying some protection against my position if it's not holding the certain areas or if it doesn't do any bull signs at my bull area. So if like this is a great spot and it just cuts through it like a knife, I'm going to grab a couple puts. And so I'm going to make money on the way down to protect myself. Because again, if I'm only putting a few $1,000s on these leaps, I can make a few $1,000s on puts in a couple weeks. and then I have a free position from there. And so that's one way that I'm looking at
Nimble.
mitigating that risk and legging into positions. People go too heavy too fast, and they go too short on their options too fast. And so if they buy it 2 weeks out, it might take 3 months to bounce. So go further out on the early ones in, and then I get a little bit more aggressive when it gets into better buying zones, even lower.
Turtle Island Trading wants to know Palantir. Let's finish up with this one because this is a retail darling that a lot of people talk about, and it is stock that has shown a lot of recent weakness.
Yeah. Man, this one is tough. Let's go to a big time frame on this. So if we go out to the monthly, this has been on an epic run. We're back into the monthly 10, which the bulls have initially found. It's like, hey, this is a great place to be. We got a short-term rally off of this, and they've given it straight back up. To me, this is telling me this is not super strong. I don't have a lot to go off of on this except for some monthly EMAs because it's just gone straight up. So the next little area I'm watching is this big rejection month. That was a big, that was a big deal at that time. And so this is the next spot that I want to pay attention to. And the 20 EMA just so happens to be right there. 20 SMA is just underneath it. This is going to be the next spot if the bulls don't hold here, which it doesn't look super strong, of the next test for these bulls to see if they're going to step in there and try to get this back higher. Everything to me does point towards higher. The one thing that I don't want to see is just a pump and then a dump straight back down. I want to see at least some type of buying structure through here. If I can see the bulls commit, even if they give it back up, that can give me some weight of reading sentiment, because every one of these committal areas are a chance for me to read sentiment and see if strength is gaining or weakening out there in the markets. If it just tanks straight back down, to me, it's a lot more of a pump and dump. And this makes that stock unbuyable for me going forward if this were to completely give up this run. You'll see this across most stocks everywhere.
You have to wait to see something at this point, not just
exactly. Yeah, that's kind of where I'm at right now, would be wait and see. We are at the first buying spot, but we've been here before. The bulls have come in hard, and now we've given it right back up. Can bounce again. To me, though, it's not as like, I guess the better way of saying is the crazy runners that the going, nuts, going berserk, another parabolic move is probably done now based off of this. If it was going to go somewhere, this would have been the time to do it, to go just crazy, push new all-time highs. The fact that it rotated back down and got below the next buying spot tells me at least the big runners, the crazy life-changing money is probably off the table now. And now it's going to go back to a normal stock of just play the trend, get your 20, 30% returns and call it good. I don't see this thing going another 100 or 200% or something like that. So that's at least what I'm seeing. Whether or not it does, all of these are, I should mention this, these are all just probabilities. This stock can do whatever the heck it wants to do. I have no idea. I'm not a fortune teller, but I do know stocks and charts extremely well. And percentage-wise, I got my pen here so you can actually see it. Percentage-wise, whenever a stock does this, it's letting me know that momentum is lower, and the chance of a parabolic move now is a lot lower. And so don't have that expectation. People keep their expectations of the lower probabilities because of what it's done before. And they're like, this is going to go another 200%. It's probably done. There's a chance of it doing that, but it's probably more like a 10% chance now and a 90% chance that it won't. So it can go higher. I just don't expect a 200% run anymore based on this price action. Parabolic markets, they've got to keep holding their strength. It's kind of like MU right now. That's a parabolic market. We start getting this price action on MU, I would say the parabolic is pretty much out of it.
Great point.
That's what I'd see on this stock.
Okay, Tony Pawlak, owner of Real Life Trading, joining us here on Pre-Market Prep. Thanks, Tony.
Thanks, guys.
Tony, awesome stuff. That's some technicals right there. He does them well. And Palantir, I mean, again, like the stock has gone parabolic. I like that whole conversation, talking about, when they stall out, then you start to get concerned. And the parabolicness of this is starting to stall out. Brentster,
Hey.
We have earnings next week as well. We got a lot of stocks on the calendar here. This one is hot off the press. Our own Michael putting this together for us in the background here for earnings next week. We've got some good ones. Speaking of good ones, we just talked about a Palantir reports on Monday after the close. Do you get a little relief pop ahead of it? Because, I love technicals and I totally respect everything Tony's saying. But I also know sometimes if you were short this thing, you're probably nervous into the report. You might see a little bit of buying ahead of the report. So I actually think Palantir could have a good day or two. Then after the earnings, all bets are off.
What other highlights for next week?
AMD Tuesday night is huge. Obviously, Lisa Su at AMD, a huge position in my long-term portfolio, has been executing very well here. But I mean, we're stalling out a little bit, 260. We're seeing a little bit of the bubbleiciousness coming out of this market. So it's very important that AMD can continue to keep the party going. And then you get into Wednesday and Thursday, and there's the meat and potatoes. Google, Wednesday, Amazon, Thursday. Huge moves. Amazon, I own the long-term account. Google, I'd like to own in the long-term account, but I didn't want to chase it. And it just continues to move higher here. Been an unbelievable move for Google, one that I definitely got wrong. Joel,
Busy
what else
week,
do you like on
busy
this?
week, busy week next week. More earnings, folks. And that's what, is the lifeblood of the market, right?
Yep, sure. You guys want to go
the Mag 7 is always the most important, but there's other companies there too that are going to be movers. I mean, you get ARM Holdings looking, to Thursday or to Wednesday, and then into Thursday we get Affirm. There's Reddit, which will be interesting. Roblox, which will be interesting. I did cut a little bit of my Roblox yesterday. I know I have that in my acronym, but at a certain point in time, you just got to say, look, maybe I've got this story wrong, and I did take a small loss. Still have half the position, but I lightened it up yesterday. On the downside, yeah, I'm the only one that admits when you have a losing trade here. That's where we're at. Fly? Let's go to Fly.
Let's go to rating the ratings. Woo!
The analysts have been very quiet with the downgrades as of late, and there's not a lot to note here, but there is some interesting upgrades here this morning. And if we're coming in here, obviously you have the chasing ones like Apple getting upgraded multiple places, Maxim, KGI Securities here. But what you have also is some out of the blue ones, and I always like the out of the blue ones.
Me too.
Stock that's been kind of in the gutter here, Spotify. Caught an upgrade last week, caught a buy rating last week, stock moved higher. Citi upgrading it here this morning. So we do have, a level of key support here, just under the $500 area, 491, the low back just last week, and then yesterday's low 493. So Citigroup says double bottom. We're going to try to put it in place here. Citigroup upgrading spot to buy. I don't know if you have any color there, Brentster. If you do, you can go to it now. But
sure.
I want technicals on SPOT because this one's been in the gutter, along with Netflix, two together.
A little bit of color, and then I'll let Joe go to the chart. Thanks to the Fly for this color valuation call, it looks like, which we aren't usually too impressed with. From the Fly on Citi upgrade here, the stock's valuation is now attractive and consensus estimates are beatable. Citi sees catalyst for Spotify shares due to price increases and accelerating buybacks. So yeah, a little bit out of the blue, and we like a little bit out of the blue, but as far as like the color goes, the color wasn't the most exciting.
This is a Dennis. I like this rating. This thing's in the gutter. I like it.
I like contrarian calls. I don't always follow them, but I have respect for them. So somebody making a call. So I'll give the analyst, a B+ for guts. But I don't know if I'm going with it or not. I mean, Spotify and Netflix have been linked very much together. We're in a pairs trader environment, and the pairs are constantly changing. I mean, some of them don't. But Netflix and Spotify have been pairing these up for a while here. And we just look at these two charts, and they look almost in the last 3 months, I'll say it for my cousin visiting, identical. Spotify, Netflix, doing the same thing.
Gotta get the movie reference in there.
They need to turn it around in a hurry here. Citigroup's trying this morning.
It's all about 520 to me. I mean, I kind of like it too, but I mean, above 520, things get real interesting. You're only at 510.99. This is one of the formations where I like to look right instead of left. And what I mean by that is I'm going to look at the top of the previous day's range, which we're still quite above. So if I was a cheapie, I'd try and buy it at 506, get a little bit of a gap fill and see for a lower risk trade. If you just say, hey, this is the day, this is Spotify, this guy's going to really move it, then, you got to get in early. And if it pulls back to that area, perhaps expected gap fill, but nothing in here on the upside between where we're at now and 520.
Let's sneak one more in. Wolf Research, another contrarian call, upgrading AVGO to outperform. Stock also has been in the gutter, but this is one, and kind of reminding me of just what Tony said. You kind of went not as parabolic as Micron or maybe Palantir did, but pretty parabolic back in April last year. The stock was $138 and then hit $414. The parabolicness, I like that word, even though it's not a word, is kind of coming out of this name here too. So it looks tired and exhausted, and I don't know if there's another parabolic move happening here. Also, I don't know if this market rolling over and starting to roll over here is great news for AVGO either. Stock has been hanging out near its lows for too long. So I think lots of reasons to actually fade this upgrade here this morning. I know it's getting an upgrade, but hell, the stock isn't even trading higher. So this one I'm going to give a C- to.
A little bit of color here. Channel checks suggest the company will ship 7 MN tensor processing units by 2028, with other projects creating optionality for numbers. Wolf's bull case for which Broadcom, which includes a doubling of its AI sales in 2027, yields $18 of earnings per share. Its price reflects 22 times the earnings power. We can no longer ignore Broadcom's growth and competitiveness in the tensor processing units, according to Wolf. We are looking inside of the fly here. Joel, any exciting technicals for
let's see if
Broadcom?
it can hold on. That's it. That's why on days like this, I look to see if it could stay green and perhaps go up to yesterday's high. Kind of a wishy-washy market, really in no man's land here between the 200-day and the 50 days. So not much on this one for you, folks.
All right, want to say thanks to The Fly, sponsor of Rating the Rating segment on Pre-Market Prep. The Fly, your source for over 1,000 breaking news articles daily, delivered in real time with custom filters and alerts. Discover their new The Fly Pro platform, which is what we were just looking inside of there a minute ago, with AI-powered analysts, company analysis, unique KPI charts for deeper insights. There's a QR code on screen right now in the bottom right corner. You can scan that, or you can click into the description of this YouTube video to get more info on The Fly. Thanks again to Fly for sponsoring the ratings part of the show. Triple D, we're up against the clock here, but any final thoughts heading into the next half hour before market open?
I think we're just in a de-risking period here a little bit right now. It doesn't mean the stocks can't go higher, but we definitely have seen rotation in 2026 to more lower PE names. I think that party could continue. I'd also be careful. I'm always careful chasing stuff, but with the fall off in metals here, with the fall off in the software names, now metals, and some of these other stocks, that have been like retail darlings, really showing a lot of weakness here of late. I worry about RAM pricing and DRAM pricing, and if that starts to turn around, it is like a commodity. You're seeing a lot of the other commodities fall. SanDisk and Micron could fall with that. So I love that SanDisk and Micron are executing, but they're still price takers here. DRAM prices start to go down; those stocks can give some of this back. So keep an eye on DRAM. I don't think things go straight up forever.
Folks, just a couple earnings here just to mention. We didn't get to SoFi earnings. We didn't get to PFSI earnings, Penny Mac earnings. Brentster, why the hell would you be talking about Penny Mac earnings? Well, implications on RKT and also UWMC. Also, we didn't get to the big oil names, which reported here this morning, ExxonMobil and Chevron. We're going to jump over to the STN room where we're probably going to talk about these. I want to give a little heads up here for some more programming in STN this morning and this afternoon. Chris Bretcher going to be coming on at 11 a.m. Oh, I skipped Mitch. Oh my gosh, Mitch is going to be joining us, folks, at around 9:15 in the STN for a little live trading with Money Mitch. He's going to get us ready for the open. He's going to take us through the open. We're working on some stuff with Mitch in STN starting next week. We're going to preview that a little bit more here, folks. Again, Chris Bretcher at 11 a.m. and then CC Legator at 1:30 p.m., folks. 1:30 till around 2. Sometimes we go a little bit over. A little look at options with CC Legator, and then Triple D and I will be back for the close in STN around 3:30. Triple D loves the weekend trade. He'll be putting on the weekend trade. We'll be considering the weekend trade. I think that's going to wrap it here for us on this Friday, folks. Thanks for tuning in to Pre-Market Prep all week. Hope everyone has a wonderful weekend.